Hello traders, Cause of Vinny coming to you from theclosingprint.com. Sunday, March the 29th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved higher last week with the exception of the Bombay Stock Exchange. All of the leaders were higher as well. Bank stocks closing higher with Nvidia outperforming, in addition to what we saw in Intel and Tesla to finish the week. Bond stock ratio is reversing. We saw HYG and junk bonds with large blocks trading last week as we rose. That's bullish. The Dow Composite did bounce. The S&P 1500 is beginning to show signs of a reversal. It has yet to give us a buy signal. And XII is bullish to neutral to end the week. Tick had showed signs of improving on Thursday into Friday, dissipating a little bit towards the end of the day on Friday. NYMO and NAMO are bullish. They're both turning higher, with NYSE crossing over, breadth thrusts rising and fading on Friday, but certainly improving as they exhibit extremes last week. NYHL is also improving, yet to get back above the zero line, and we did see the S&P 500 equal weight improving with A50R still at 1.80, which is telling you that 98% of stocks are still below their 50-day moving average with room for improvement. Put-call ratio is back to neutral. That's a welcome sign. We'd like to see more calls bought this week. VIX is at extremes. This is the key to the market. If VIX does come in, that means that market makers and dealers are going to have to cover their positions, else they lose the volatility in a lot of their short positions. While the dollar saw an extreme reversal, a whipsaw, if you will, over the last couple of weeks. Bonds also saw an extreme change of direction. Weekly bonds are showing a bullish trend. The 10-year yield had a wild week as well, moving back down towards the low on Friday. Gold and precious metals also saw an extreme bounce. There's a condition where we could see a triple top on gold, so keep an eye on that. Copper is trying to bounce. It's forming a base near the lows, with West Texas crude and Brent showing weakness for 12 weeks straight, 70% off of highs. The heat map is bullish. That hit an extreme last week. I would expect to see some give back on Monday and Tuesday. Doesn't mean that's a guarantee, but it's certainly showing extremes when we review that in a few minutes. The heat map for the international markets also shifted to more bullish extremes. Of course, we'll look at some IBD 50 names that are showing relative strength, showing signs that we could see a follow-through, along with some MarketSmith relative strength names, and in green, the top volume percent gainers. Bukowski is showing 505 red with a CPI signal half red since March the 20th at 31%, which is neutral to slightly bearish, with 6 bearish patterns, 3 bullish patterns, and 713 patterns waiting for breakout. Bottom line, after the extreme move that we saw last week, a 20% retracement, we would expect to see a little bit of a pullback, so we are cautious. We're watching what institutions do this week. We also want to keep an eye on open interest and gamma to see where institutions place their bets going into April options expiration 3 weeks from now. This is a chart of the Spider Weekly. We can see nearly a 36% drawdown from the February highs down to the recent lows in March. The bounce that we had last week was around 20%. We're just shy of the 200 period moving average on the weekly time frame, as well as 382. I wouldn't be surprised to see a little bit of a pullback, but we're open to either direction. It all depends on what kind of changes we see in open interest and options this week, as well as gamma. The way it ended last week on Friday, there was no rally after the Congress voted on the bill and then passed it off to the president to sign. So I'll be very curious to see what happens on Monday morning. We do, however, have an oversold condition. Relative strength is improving. That could follow through as well. Similarly, we saw the Nasdaq give us the same drawdown, 30%, and nearly a 20% gain. This is off a little bit. The 200 period is overhead as well. We're thinking that if we do see a little bit of a pullback on Monday, Tuesday, and a follow through, that eventually we're going to run into the 200 period moving average and might see initial resistance there. So be prepared for it. We did have a similar RSI oversold condition on the weekly time frame, while IWM also pulled back the most and bounced substantially. Notice the close. We had nearly a bullish engulfing on the weekly. We did on the Nasdaq and the S&P. I forgot to point that out as well. A nice rally back to these moving averages overhead, while the 200 period is near the gap. RSI is oversold and improving. All of this is happening, of course, while the Nasdaq McClellan oscillator bottoms and starts to turn higher. We did hit extremes and pull back a little bit, but the overall trend is starting to gain some momentum. Again, while we expect we could see a little bit more pullback before maybe another leg higher and a test of the 200 period moving average overhead, it is nonetheless giving us something to look forward to in the weeks ahead, as the NASI is about to cross over, and we did see the NYSE for the New York Stock Exchange cross last week for the New York Stock Exchange Composite. Of course, this is 2,000 stocks, so there's a lot more weight. So with this crossover and the change in direction, or bottom, if you will, in the moving average, the black line, we'd expect to see more of this kind of action over here on the left that we saw back in late December when we reversed off of the December 2018 lows. Look for this trend to continue, for NYMO to improve, and more stocks moving higher and above their 50-period moving averages in the weeks to come. If we do see this momentum continue, and that's a big if, we would expect to see the S&P 1500 composite, which you're looking at here, the high-low percent on a cumulative basis, crossing over. If it does cross over, that'll give us a buy signal. We'd expect to see more green bars above the zero line on the histogram, and for the index to continue to move higher and through the 21 period moving average just overhead. Additional measures of breadth, like the New York Stock Exchange, new highs minus new lows, has clearly bottomed. We can see the black line is rising. We need to have the histogram above the zero line, and also see improvement in the New York Stock Exchange advanced decline in the middle panel. That will translate into price moving higher, though I definitely don't expect it to be a straight shot back to 13,000 in the short term. Rather, we're more than likely going to see back and fill along the way if we do see a follow through. Many people, of course, are looking for a double bottom, a retest of the recent lows, and that would be reason for more people to kick into FOMO if we don't pull back over the next few days. We'd also expect to see the S&P 500 equal weight index, where no stock is more important than any other, to continue improving. Here's the 2018 low over here on the left, and we ran right up to that area delineated in blue between the 236 and 382 Fibonacci's, and we slowed down and gave back some around 3:30 on Friday. So we'd like to see a follow through, obviously, but more than likely we'll see a little bit of a pullback and then maybe a follow through if we're lucky, if conditions start to improve and we start to see more calls bar. The big issue is with VIX, we need to see a fade and start to drop from this overheated zone. This, in my opinion, is the key to the whole situation right now, with market makers and dealers sitting on a lot of short positions. If we start to see VIX moving lower, that means the volatility in those premiums will start to compress and start to lose value. That would be an incentive for them to cover and would represent a catalyst for helping us move higher going into Monday and Tuesday. The bond stock ratio also had its extreme moments last week. This is beginning to show a reversal in favor of equities over bonds if this continues to drop. All of this happening while we see junk bonds and high yield corporate debt. There were several very large block trades on Wednesday and Thursday. Almost a bullish engulfing reversal candle for the weekly time frame. Starting to move higher. This is bullish for equities if this continues higher. We hit this volume by price band and got rejected. That's initial resistance. If we get above that, then you could see the 200 period moving average overhead in the weeks to come. RSI is oversold and improving. We also saw extreme reversals in bonds. This is the Barclays Aggregate Bond Fund. This is everything. The kitchen sink is related to bonds, mortgage-backed securities, etc. This moved higher last week after a big reversal in the previous week. So basically, we're looking at this trend on the weekly time frame. We're above that level, looking for more extremes as volatility remains above 65. This too will start to come back in and compress more like we saw back here over the last year if volatility and VIX continue to compress. With the same thing happening on the 20-year duration. The trend is pretty clear. We're above the moving averages here, and looks like we could retest the highs if things start to improve a little bit more. More than likely, what I think is going to happen is if VIX does start to come back in and we hear more coronavirus cases remediated with the use of hydroxychloroquine and erythromycin, VIX will come in and these ranges will start to compress as fear starts to dissipate. If not, these ranges will remain very large, so we'll need to plan accordingly. We also saw big whipsaws in the US dollar, and of course that affected currency pairs. In this case, we've got the British pound US dollar pair. With the dollar dropping dramatically, the British pound reversed in the opposite direction, as you would expect, while we saw the same kind of action in the US dollar Japanese yen pair. Big extreme moves over the last 6 weeks, 7 weeks. So we're starting to see a pullback, which is telling you the US dollar is underperforming, hitting 104 last week and reversing during the week dramatically back to the 98.50 zone, which had the opposite effect on gold. As the dollar dropped, gold reversed and moved higher. We're now faced with a situation, if you're trading gold, with a triple top. We're trying to push back higher. It looks like by the end of the week on Friday, wicks underneath these candles on Thursday and Friday, and on Tuesday and Wednesday we had wicks up high. RSI is above 50. So I think we could still see some more jockeying back and forth unless VIX starts to come back in and things start to settle down going into Monday and Tuesday. If you're trading any of the home builders, construction related, or home building products group names, need to keep an eye on copper. We want to see this firm in this area, build higher lows and higher highs, and get back up into this range that we saw earlier in the year. That would be bullish for those stocks. If we don't, that would be bearish on the economy, as we saw back in 2009 when we had this big drop-off leading into 2009. The end of 2008 were reversed. This was a forward-looking indicator, and one which forecasted the reversal in fortunes from 2009 into the highs in 2011. We also saw the same thing in 2016, 2017 after the recent election, and we're starting to see a reversal candle which needs to continue higher over the next few months going into the elections in November. If we do see that, then expect to see home builders, construction related names, and construction products continue to move higher. Over the last 12 weeks, we saw a 70% drop in crude oil. Something has to happen here. This would be very bullish if we could see a bottom, not expecting it, but if we do see a bottom and a reversal, look for equities to improve, yet another catalyst that could help put a wind in our sails or a headwind if we continue to see weakness into the spring and summer months. Sectors began improving last week beyond what we were expecting, with just about everything being bought up from extreme lows. We also saw the same thing in international markets. Make sure you stop the video and review the areas that pique your interest. While all of the sectors improved over the last week, bottoming on Monday and following through, most ran into the 20-period moving average and fade a little bit. I would look at these as flags. I am anticipating that we could see a little bit of a pullback before retesting the 21-day moving average in most cases, with utilities and real estate seeing a lot of attention due to investors chasing yields. Overall, most of the sectors showing the same kind of performance. Oversold conditions rallying on the weekly time frame. Here's real estate, transports, materials, communications, energy, financials, industrials. Notice that technology bounced at volume by price. Very large support zone right in this area. Consumer staples also bouncing near volume by price support, looking for a follow through. XLU utilities, healthcare, and consumer discretionary also improving. RSI. Big bounce. Note the volume by price resistance overhead, so we've got a lot of work to do on consumer discretionary and retail, as people more than likely will hunker down and keep the money that the government's giving them. Many people without jobs at the present time, with the recent unemployment reports that came out last week. And finally, consumer discretionary versus consumer staples. This needs to turn back up and start improving, similar to what we saw back in 2018 into 2019, with that 20% drawdown reversing and following through. You can see that we don't have that yet. So while institutions are buying a few stocks here and there, we need to see more. As you remember, with the number of stocks trading above their 50-period moving average, we're a long way away from a sustained rally. Most people do not believe that we're going to see an L-shaped rally where markets start to trend from this point forward. So we'll have to keep an eye on institutions. They need to sustain the buying that we've seen over the last week. Here are the IBD 50. We're looking for stocks that are moving above their 20-period moving average, like EHTH, eHealth, Five9. So we're very interested in stocks that are moving through the 21-day. If they're above the 200-day, that's even better. There's very few stocks that meet that description. That said, we do have RSI improving from oversold, price action closing above the 21-day. ARE looks like it could continue to move higher. This is a real estate REIT. Many investors chasing after yields. Some of these real estate stocks should continue to perform. Also look for volume, which will indicate that institutions are active. MACD cross in this case, looking for a follow through. Alibaba had a pretty good week until Friday. We got congestion at the 200 period and the 21-day. RSI should start to improve, move above 50. If we're looking to get long, price needs to get back above these moving averages. Volume tapered off on Friday, so that's a good sign. MACD's crossing, momentum is clearly starting to be more bullish. So if we do get back above the 21-day and the 200-day on Monday, and volume starts to increase, this momentum should continue. That would be a prerequisite and something we'll be looking forward to if we do see a follow-through on Monday and Tuesday. Americold Realty, COLD, another REIT that's showing positive price action, moving above the 200 period, cleared the 21-day on Thursday. RSI is above 50 and rising. This is looking very promising. Nice volume, 3 million shares on Friday. Looking for a follow-through. Obviously, bulls are in control. MACD is above its signal line, and histogram is above the zero line. Audio codes we reviewed last week. This pushed right through the 200-day and the 21-day, came back and tested it. Where did buyers show up? Right at both moving averages. So if we do see a follow through, this cheap stock at $22 per share could see a nice follow through. Look for 23 and then 25 in the short term. We'd want to see RSI stay above 50, improve by moving higher, and also see more volume. MACD's above its signal line and rising, and histograms above zero line. So there's a pretty good shot that this stock will continue to move higher. The only thing that I see with this one is that it trades below 300,000 shares on an average day. So that's something I'd like to see improve over the coming weeks. BlackRock is also improving. This was a nice one that moved above the 200 period moving average back in October. I know Mikey was trading this on this breakout and had a nice trend, just kept going during the winter months. Now that we're into March and the volatility hopefully starts to pull back in, RSI, if it stays above 50 and we can get back above the 200-day, I'm thinking maybe we consolidate here for a couple of weeks, maybe be a little bit early for an entry in BlackRock. But if it does get above the 200-day, that'd be a big plus. And if volume starts to increase, MACD has already crossed, it's following through above its signal line and rising, showing that the bulls are in control. Look for a follow through in BLK. CTLT, also another candidate that looks like it's trying to get above the 200 period moving average. This is new on the IBD 50. The company provides delivery, technology, development solutions, and clinical services to marketers. I imagine a lot of companies are looking for ways to bring in revenue during these trying times, so companies like Catalent will most likely benefit. We do see annual sales and earnings increasing, the lifeblood of any good stock that you might hold for the long term. We're looking for improvement for it to move above the 200-day for starters, if you're thinking about trading it this week. Chegg, purveyor of electronic and printed materials for students and educators. Looking for this to get back above the 200 period moving average and start rising. MACD's crossed. The pullback on Friday back to the 21-day. We're going to see a 9 EMA 21-day cross in the short term. If the moving averages can turn back up, you'll get a 21-day, 200-day cross as well. On the pullback, we did see volume tapering off, so we'd like to see an increase in volume on any breakout over the next couple of days. ConAgra Brands, obviously in the consumer staples group, looking for this one to follow through as well. RSI is rising, MACD's turning and above its signal line. Need to see volume increasing on any follow through breakout above the 200-day, the green line overhead. Dropbox, we thought we might see a follow through and a breakout on Thursday. It didn't happen, pulled back on Friday. Volume did taper off, so that's the only saving grace. We'd like to see this one pushing higher to start the week. MACD's above its signal line. Edwards Life Sciences and a lot of the healthcare names. Nice follow through from that Monday reversal, taking a break on Friday on tapering volume, which is the saving grace here as well. Whenever you see a pullback or a flag, you want to see that occur on lower volume. That's a good sign. If MACD could continue this momentum, maybe we see a push off the 21-day and a test of the 200 in the short term. That would push RSI above 50 as a function of price. eHealth, strong performer. I believe this is the first time this is on the IBD 50 this week. EHTH, something of a descending pattern, lower highs. If it breaks above that level, look for a follow through. RSI will remain above 50. If that's the case, we'd like to see any breakouts on above average volume. If it does break out, look for a test of the recent highs at 152.19 in short order. MACD's above its signal line and rising. 5.9 seeing a follow through with the company developing cloud-based customer contact software that assists contact centers and customer service sales and marketing. Big at this time with the current situation, with annual sales and earnings climbing and increasing, with decent IBD numbers. Doesn't report until the 1st of May. Looking for a follow through. If it does break higher, you got a profit zone overhead in green. Love to see any kind of push on above average volume. Note the RS line is at 97 and rising. Form factor, similar to a lot of stocks that are reversing on Monday, following through Tuesday, Wednesday, and Thursday, having some rejection on Friday on that little pullback on below average volume. RSI needs to rise and price needs to get above the 200-day for starters. Same thing with Genmab. A Denmark-based company develops antibody therapeutics for the treatment of cancer and other diseases. A lot of these stocks getting a lot of notoriety and attention lately. Has earnings in 39 days. Recent EPS was a 75% beat. Decent annual sales and earnings continuing to climb in the right direction, and also good IBD metrics. GoDaddy, we talked about last week. The reversal was fine, moved above the 21-day, reversed back to the 9 EMA, looking for a push back above the 21-day and a test of the 200-day in the short term. While we didn't like the volume on Friday, this is the exact opposite of what we want to see. On any pullback, you want to see lower volume, not higher volume. So this is a little suspect. If this starts to drop a little bit more, it could be retesting the lows in the short term. We do see an opposite stick of volume like we did over here and here back in November and February. Look for a follow through. So this is all depending on volume from my perspective in the short term. For any clues. Alumina above the 21-day, got a 9 and 21-day cross. Momentum is clearly bullish. RSI above 50, MACD is above its signal line. The little pullback there, notice it was on lower volume. We'd like to see a spike in volume like we had back here on Thursday 2 weeks ago. KLA 10 core, we want to see LRCX, NVIDIA, Intel, AMD, all the chip stocks, we want to see them all moving together, get back above the 200-day moving average and follow through, which as you can see, AMD has already accomplished. Stayed above the 200-day, that's why we liked it last week. On Monday, this followed through, back above the 21-day, we got a 9-21-day cross. Looking for price action to follow through. Volume was lower than average on the pullback and slight retracement we saw on Friday. MACD is above its signal line. Rising histogram is above 0. Looking for AMD, NVIDIA, those two in particular, to continue to move higher over the next couple of weeks, with the possibility of a retest of the 21-day before moving higher. Love to see a breakout instead, so keep an eye on AMD this week if you decided to swing a position over the weekend. Lumentum looked like a nice follow through, came back to the 200-day. Volume was a little bit above average on Thursday. Friday it tapered off a little bit, so looking for a pop as this consolidates. Many stocks most likely will consolidate around the 200-day once they move above, like AMD did in the previous chart. So rewind the video and review. If it holds the 200-day and starts to move higher, that's a good sign for stocks like LITE. Match Group, we're looking for a follow through here as well. Pull back on Thursday and Friday. Tuesday, Wednesday, Thursday, this had a nice follow through. That rejection at the 200-day is notable, so we need to get above that if we can. That'd be a good sign and something that would suggest that institutions are picking up share, especially if we start to see more volume. Mellanox also with a agreement with China over some issues. You might want to do a little bit more research on your end. This looked really good last week. Followed through and flagged. It didn't pull back. Volume was above average, so we're watching for this to continue higher. For this Israeli designer of adapter, gateway switches for servers, telecom infrastructure, equipment, and storage systems. If we look at the news, we could see what was getting things moving last week, though it doesn't list what I was overhearing last week on CNBC. So keep an eye on Mellanox. This one could move higher. NIC Inc. eGov is the symbol. Looking for a follow through. This company is pretty interesting. It's new on the IBD 50. You got a 9 EMA 200-day cross. RSI is rising. We have MACD above its signal line and histogram is above 0. Love to see more volume. The company provides a portal for outsourcing for state and local governments during this coronavirus epidemic. As you can see, starting to see many of these state and local governments working with eGov to help them with their issues. So look for a follow-through in the short term and an increase in volume, while MACD remains above its signal line, signifying bulls are completely in control. Netflix also should be doing well. People staying home, hunkering down, watching a lot of binge-worthy content over the next couple of months until we start to get back to work. As previously mentioned, we're looking for NVIDIA to hold above the 21-day and the 9 EMA, about to cross. RSI stay above 50. Come out of this flag to the upside. We'd like to take some calls this week if we start to see some big blocks again. We did have AVGO with a really nice gain on Wednesday, which some of you may have taken. These calls started off at $2.80 at 9:54 in the morning. You can see where price action was at that time. Started to move above VWAP, the dashed magenta colored line. Those calls ended up the day at 1460 and 1130, having hit highs of 1830. The 225 calls is what we were looking at. Having traveled from 210 all the way up to 250 before reversing at the end of the day. This was a very profitable trade. If you took it, congratulations, as we'll be looking for more of these types of trades this week. Palomar Holdings, we talked about this one over the last several weeks as well. The way this held at 200-day is what I'd like to see on many of the stocks that we're looking at this week. If it gets above the 200-day and consolidates like Palomar did here, look for this area of support to ignite interest in institutions. They show up in volume, and then start to see price action move through the 9 and 21-day. These are really good setups and something you should be looking forward to in the weeks ahead. Quidel, a stock in the healthcare and disease-related industry groups. Notice it's holding the 21-day pretty remarkably, although the volatility has really picked up over the last 6 weeks. You start to see really big moves above and below the 21-day. We took profits into Friday. Looking for this to pull back a little bit or follow through. If this continues, note the volume. This is the kind of thing we'd like to see on many of the stocks that we take this week, among other things, with MACD above its signal line and rising, and RSI remaining above 50. Real page looking pretty strong after the reversal 2 weeks ago, following through back above the 21-day, holding above. 200 days just overhead. RSI is rising. Volume increasing, showing institutions are picking up shares. MACD's crossing, while sales and earnings continue to grow at a nice clip. IBD metrics are very strong with A's in high 90s for a company that provides on-demand software for managing, screening, and leasing and accounting in the rental housing industry. Looking for follow-through. RSI is rising, volume increasing, and we don't have earnings until the second week of May. Safe hold, doing very well. Nice trend off of the 200 period moving average, reversal. Following through, this company is a REIT that acquires and owns and manages diverse portfolio of ground net leases. When you think about companies like Cohen and Steers, symbol CNS, Charlie November Sierra, these companies lease out properties to quality companies, a steady flow of income, and obviously shows up in annual sales and earnings. Good IBD metrics with earnings out at the end of April. Look for a little bit more volume and for relative strength line to stay pegged at 99. Solar winds looking kind of interesting, following through last week. Looking for it to stay above the 21-day moving average, then move above the 200-day. RSI is rising. MACD is above its signal line and rising. Steris PLC, symbol STE, also looking for a follow-through here. RSI is rising. MACD is about to cross and move above its signal line. Volume is starting to increase. The takeaway is that most of these IBD 50 stocks look pretty strong for the most part. TAL Education in China, similar to how our kids are using Zoom and other products for their online education. TAL does that in China. Price action looking pretty strong, bouncing off the 200-day, moving above the 21-day. Looking for a push off of this zone and RSI to be above 50. MACD is already crossed and should continue to move higher. Teladoc, we've been in this one for a couple of weeks. Since it reported earnings on this gap up, it receded a little bit, moved back below the 21-day, regained it over 2 weeks ago, followed through a little bit of volatility last week, but it looks like the trend is going to continue. The 9's above the 21-day and prices above both. RSI is above 50, MACD is above the signal line, and rising on above average volume. Look for Teladoc to follow through. Twist Bioscience also following through last week. RSI rising, MACD above its signal line, volume increasing, price above all of the moving averages. Looking for a little consolidation over the next couple of days, or a follow through for a potential trade on a fairly inexpensive stock trading around $30 per share. A lot of pharmaceutical stock looked pretty strong last week. Keep an eye on these. They get above and consolidate above the 200-day moving average. Look for a bounce and a follow through. Also, make sure you check out some of the names in the list below. Notice that there are fewer names in the MarketSmith Growth 250 Relative Strength scan. Only 4 names in addition to 5 names in the top volume percent gainers for the week. So be sure to check those out. If you're a MarketSmith subscriber, just click on the relative strength line climbing new highs during a correction. That gives you 8 candidates for the week, I believe, if I remember correctly. And just check out some of these names on the MarketSmith Growth 250 top volume percent gainers for the week ahead. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com on March 29th, 2020 with your weekend video newsletter. We'll send out a watch list later tonight around 11:30 on the East Coast, 8:30 on the West Coast. Just remember, we have to see how institutions are positioning to start the week before we put a lot of money to work. We're anticipating we could see a little bit of a pullback after last week's huge gains across the board. So don't be so eager to put money to work first thing in the morning on Monday. Let's see right around 10:30 how things shape up. Otherwise, take care. I hope this helps, and we'll talk to you soon.